right, live, not from New York City, live from Idaho, live from the Teton Valley. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition, position disclosure, new position in Pinterest. Let's look at some charts. All right. So got a little bull rally today on low volume. The question is, is this day actually significant or not? And we'll obviously look at all three of our major indices to see. I'm actually kind of disappointed by today's price action, to be honest, which sounds crazy because we're up 2.6% here for the S&P and 3.5% for the Qs and 2.8% from the IWM. The reason I'm disappointed, I think, is because most of that upside actually occurred with the gap. And then we really spent most of the trading session kind of digesting that gap and with a little bit of an upside grind to it, which, you know, what I kind of discussed in yesterday's afternoon meeting and talked about a little bit more this morning is like the concept of when we get really oversold to the downside, when sentiment and positioning, institutional positioning becomes really bearish, it makes us ripe for like an explosive upside move. And again, it's a really big up day, but it's hard to characterize today's intraday price action as explosive. It was grindy and it was on low volume. In the morning meeting today, we talked about this gap. So this gap is technically a common gap higher, and common gaps tend to get filled, and we're definitely in a bear market. So basically what I was saying to the team this morning is, you know, your good book of technical analysis would really say that you want to come in and short. Common gap up in a bearish market, you know, gapping up to the 80 MA, so that makes us not so extended. You really would, you know, technically want to come in and, you know, sell longs, and if you're able to even have any longs, because it's hard to have longs with how we closed yesterday, right? We closed really weak yesterday. But so you want to sell longs and put shorts on into this gap up higher. But technical analysis is not always as easy as just memorizing what things look like. And again, if you just go based on memorization, then yeah, you probably want to be hitting the short button the second the market opens today. But it's not. I'm a big advocate that technical analysis is not just chart pattern recognition. If it was that easy, everybody would be a millionaire because you start to develop your pattern recognition skills when you're like 5 years old. It's really about understanding the supply and demand dynamics behind the market that you're looking at. Because if you understand how people are actually positioned in the marketplace, then you understand what they're most likely going to have to do next. And if you understand what people are most likely going to do next, that's really kind of the keys to the castle, if you will, where you can really kind of make money on it. So yeah, I'm not saying don't memorize, you know, what a bull flag looks like and learn the different types of gaps. I am definitely an advocate of learning that. But you have to think a little bit more deeply when you're looking at a chart pattern. It's not just that chart pattern, it's the supply and demand implications behind that chart pattern. And what we discussed in the morning meeting today is that even though it's a common gap in a bearish market, so we easily could sell off and fill that gap, and there's a decent probability that that will happen, I want to think about what this large gap up this morning is actually doing to the participants who are in the marketplace. And the thing about this gap up is people who want to be long right now, it's very difficult for you to be long. It's really tough for you to be long coming into today's trading session because I mean, why would you be? We had new closing lows in the year yesterday, and we closed on lows. So yesterday's close made it very difficult to be able to keep longs overnight. Unless you were doing it in something that's really relatively strong, like an energy or oil, which, you know, then that gap down huge this morning. Or, you know, we were able to recognize in the intraday session yesterday certain pockets of relative strength, like XBI, which, you know, XBI then performed really well today. So I was able to do really well with that Labu position where we discussed that, you know, buy in the Labu position right into here when we were showing the relative strength versus the Qs at that point in the day. We discussed that in the afternoon meeting yesterday. There were some others as well that I wasn't involved in, like a Roblox, that we were able to also, recognize the relative strength here at about 10:30 when the Qs are making lows. This was performing better, and that's another one that gave, pretty good follow through. But unless you were able to really identify that intraday relative strength yesterday and have stocks that closed okay, really, really difficult to be having much longs. So when we're gapping up like this morning, part of the reason why common gaps get filled is because longs use as an opportunity to book profit. But the question I have for you is, what longs are booking profit this morning? Because who's got long positions? We know market positioning is very much down to the, is very bearish right now and is, probably short this market in a pretty big way. And the longs never got the chance to buy. So they're not coming in and booking profit. And even this morning, it was really difficult if you want to be a long. And honestly, some of the best bull case that you can make right now is how hard it is for longs to get in. I don't think, as Josh made a comment about, maybe they're just head faking the longs with this move today. I don't think that many longs even bought today either, because it was we gapped up so big that it makes it very difficult. Even if you want to be long this market, yesterday you just had the opportunity to get stock at 415, and now we're gapping up to 425. It's just a difficult buy, and we were able to find some good buys today actually, and some things that gave us some follow through. But I don't think that a lot of longs were still even able to come in. So maybe that means that we can work our way higher. But the flip side of that is that the market hasn't recaptured any key technical levels. But I'll get to that in a second. I still want to talk about today's gap. So the flip side of that is, when you're thinking about what this gap, the implications of this gap for the participants who are in the market, well, longs aren't really going to come in and sell because they're not really long. And shorts are maybe in a little bit of trouble. I would say that they're not in a lot of trouble, though, because, again, the market really was not able to recapture any key levels, at least not in the SPYs and the Qs. The IWM did, and again, we'll take a look at the other indices in a second. But there is probably some degree of short covering happening in this move, though I also don't think it's major. So what we ended up kind of having today was, a really strong day on a percentage basis, but it led to like a low volume, grindy type day, because I don't really think that we, for the most part, recaptured key levels that are going to start a short squeeze or are going to start giving longs, FOMO, where they say, oh my God, I can't believe I missed the bottom, and I got to get in. So again, that led to this kind of grindy upside price action. It led to a pretty low volume day. I guess technically the candle in and of itself is bullish, but all we did was get back to the ADMA here on the daily chart for the SPYs on a closing basis. This market only begins to become a little bit more bullish, getting above, if we are able to negate this negative Maribozu where we broke down from. So we get back above 430, we get back above 432.30 for the SPYs. This market starts to become more bullish. And then even there, though, it's really only above 440 that I think I could even describe the market as coming back into more neutral territory. So you get more bullish above 430. Maybe that begins to start a short squeeze and some long chasing. But then it's really above 440, I think, is the really big key level for the SPYs, where the S&P actually, I would argue, isn't actually even bearish anymore if we're able to get back above 440. But we are a ways away from that still. So that is the SPYs. Let's see if the Qs and the IWM give us a different picture. Qs do not. Qs, it's basically the exact same thing here, right? Heavy gap up this morning, low volume day today. Gap did not get filled for the reasons that were just discussed, but we're basically closing at the ADMA in a bearish market. We need to negate, first step here is really to get back above 340. Not just negate this negative Maribozu, but recapture this last level of support that we broke down from. So getting above 340 would be a start to some bullishness, but we're not bearish anymore, if that makes sense. I think, unless we're getting a close above 350. Only with a close above 350 would the Qs start to become more neutral. So again, okay up day today on very low volume. But this is not something to write home about. This is not the bulls really recapturing the market or anything like that, despite the percentage in which we're up. But it is constructive. And like I said, I do still think that there are some reasons, even though we want to definitely take those with a grain of salt because we are in a downtrending market on pretty much every time frame. There are some reasons out there, still positioning, still sentiment, though I'll be honest, like that short-term sentiment indicator that we like to look at, which was in the buy zone as of the 2 previous days' close, that's probably going to be out of the buy zone as of today's close. So sentiment is probably improving a little bit. I know that greed fear index is still pretty much all the way down to the fear side. So there are some market dynamic related things here that could lead to a much further bear market rally type of situation. But we haven't even captured any key levels for the SPYs or the Qs. IWM has, though. The IWM was able to give me that close above $200 today. So I would say that the IWM is back into neutral territory as of today's close. And the Russell, as I've said numerous times now, led us lower initially, but has actually been the relatively strong index since the beginning of February. And I think that the chart is showing that with this close above $200, relative strength there again. IWM is up a solid 2.9% here. Really, really solid day here for the Russell percentage-wise. Also low volume, getting back above $200 is constructive, but I think that we need some confirmation from the other indices before we start getting too excited about being bullish. So that is the indices and kind of where we stand. As far as stocks go, man, I guess I'll start by talking about energy. Energy keeps almost giving me the degree of the dip that I want, and I guess I'm just not greedy enough or something. XLE today closed down 2.7% only. USO is down 11.4%. So really interesting degree of relative strength from the energy stocks compared to the actual move lower in energy today. I discussed in the morning meeting today buying energy stocks in the space in between the 8 and 21 EMA, but being pretty cautious about doing that on the first down day. And this index, as far as I'm concerned, was still able to hold up really well, especially considering what oil did. Obviously there's a huge gap down here, but they rallied this thing up and mainly spent the day consolidating. And you look at the daily candle here, the XLE, and it's we got a little bit of a tick below the 8 EMA, but still managed to kind of close above it. It's impressively bullish, and the most impressively bullish one of them all, this Oxy, is mind-blowing, the degree of relative strength in Occidental Petroleum. XLE, I just said, I think is down 2.5% or whatever, and Oxy was able to close up 5.5%. Just a monster. I had on my list today to start looking at Oxy for a buy, really starting into the $50 area, which is kind of where the 8 EMA was pre-market, but I really wanted even a little bit of a bigger dip than that. I wanted kind of upper 40s, and you just had to be aggressive to be able to get this. You had to be willing to buy it on the first real big gap down day that this is seen. It got bought up immediately, didn't even touch 50, breached yesterday's low barely, and then was just incredibly strong. Look at the ranges on this Oxy chart, just impressively bullish. I know some of you guys who are a little braver than me, started buying this thing, pretty early. So congratulations to anybody who caught that, $6.5 intraday move on Oxy. I was just looking for a little bit of a deeper move. We had a bunch of other, pretty good trades that were brought up in the morning meeting today. We discussed the breakaway gap in this SGFY. I didn't take it, even though it was my idea. But I know some of you guys did, so congratulations if you did. Really nice breakaway gap here. I discussed being long versus like 15 quarter, so I don't know if the people who caught it bought it at the open and were giving it all the way to that 15 quarter, or if they found an intraday spot because the volume here was perfect. This thing really woke up and it was a really good trade. This was a breakaway gap on an upgrade off of a strong looking base, so that is a trade that I like. I brought up some names that were relatively strong yesterday, but I like the daily chart for continuation today, and some of them traded pretty well. Roblox, all it's doing is touching the 80 MA on the daily chart. It's a downtrending stock, but this Roblox is up, 6% I talked about this Unity, U here, 5 down days in a row, higher volume Maribozu yesterday for a snapback. So that Unity is up 9% today. So that was a pretty solid move. I talked about Match. I guess, you know, Bumble was up huge on its earnings report. Bumble is 42% on the day. So I talked about this Match, which also got upgraded. Little bit tricky to do anything on the daily chart, but we talked about this bull flag that was being formed here on Match on the 5-minute, and this is a textbook bull flag where the gap itself is the flagpole and the consolidation is obviously the flag itself, and as the ADMA is catching up is when you get continuation. So we called this out in real time. There was a very real buy here that you could have done around 96 quarter or so for the continuation of the bull flag in Match. So that was a solid one. And then my favorite, the one that I really wanted to focus on today, which turned out to being a very nice trade, was Pinterest. Pinterest up 9% on the day, really exploded early on. I guess Felipe and Pat have been looking at this thing for a while. Members of the team here like the fundamentals on this. I still think that this is a buyout candidate. We discussed how there was chatter back in here when the stock was in the 50s about PayPal coming in and buying it, and then PayPal came out and denied it, said it wasn't true, and you see the gap down here, and then the trend continuation, and obviously PayPal itself has continued to get slaughtered. But I think, and I don't have any evidence to back this up, this is just what I think, I think that there really was, I think PayPal actually was looking at Pinterest, to try to diversify their business a little bit and open up what they're doing. I think PayPal was really looking at them, but with the market environment and the way PayPal was trending lower and the way Pinterest was trending lower, but then caught that big bid on that rumor, that they decided to kind of step away. But now you're down more than you're down 50% from when they were looking at it to buy it out. So I think that the buyout situation here is real. The free cash flow that the company's producing has been increasing, and from a technical perspective, I liked yesterday's candle. A little bit of an uptick in volume. Also like the 5th day down here. It's a potential double bottom, which everyone has heard me say, and I think I even have a video on it on the YouTube there. One person's double bottom is another person's H pattern, right? So an H pattern is a bearish trend continuation pattern. It looks like the lowercase h kind of. A double bottom is 2 equal lows that breaks higher, so it looks like the lowercase letter W. So whether it's an H pattern or a double bottom depends on which way it breaks. So if these two now kind of equal lows break, then you're looking at more of an H pattern situation. If this thing is able to get above the previous high of $27, then you're looking at a double bottom type of situation. If it gets above $27, the technical continuation of that double bottom is an additional $5. That would bring you up to $32. The way I get that is by doubling the space between this high and these lows. That's about a $5 move, and then you break it to the upside, right? So if it's $5, so 22 to 27 is $5. 27 plus 5 would bring you up to 32. That's what a technical analysis textbook would tell you, and you guys know how I feel about technical analysis textbooks. So I'm looking for a move. There's a reach target here initially to $35 on this thing, where there is some previous resistance, a little bit of an overshoot of what that double bottom would be, but you only even get confirmation on that if it's actually able to get above 27. So I was able to accumulate an okay sized position in it. I wouldn't say I'm huge, but I'm not light. I was able to accumulate kind of an okay sized position on it, and it wasn't easy, honestly, because having to buy this thing a little bit more extended than I would have liked. I was doing a lot of my buying in here. My first purchase was actually $23.50, up below the low of the day, and then I added a little bit on the way up, and then I added a bunch more into this consolidation, including into this pullback. And then I didn't sell any all day. I sold 1/10 of my position into the close, just to take off a little risk into the overnight. But I'm going to be, looking for that bigger move in pins, and it was, up 9.5% on the day. So that turned out to be a really solid one. And again, it was about recognizing the relative strength yesterday, the volume pickup, the fact that it was 5 down days in a row, that enabled me to feel like I could buy this thing even into the gap up. Because again, that was the concern about buying anything early this morning, is the whole market's gapping up so big. Do you really want to buy a common gap to the upside in a bearish market? 9 times out of 10, it's a loser. 9 times out of 10, if you're buying a common gap to the upside in a bear market, you're going to lose money. But again, we already discussed the market dynamics where that could be a little bit different today, and that's how it turned out to be. And this pin said, really good opening volume on it. So I got in this one. I'm swinging it. I know some of you folks did as well, which is good. So great close on this thing today. Close the way we want it. Let's see if we can get some real follow through on this. To try to make some real money on this trade, because I think that the potential is there. We do need the market to cooperate at least a little bit, though. Like I said in, I think, yesterday's afternoon meeting, we're identifying these pockets of relative strength in the market, but it doesn't matter how relatively strong your specific sectors that you're looking at, like the biotech sector that I was identifying the relative strength in for the last couple of days, and that continued through today. Or recognizing some relative strength in some of these beaten up growth stocks yesterday, like a Roblox, like a Pins, like a Unity. It doesn't matter how relatively strong what you're looking at is. If this market decides that we're in a bear market, we're going to continue to go lower, then these trades will fail also. So you do want to make sure you get your risk covered as much as you can. Try to put yourself in that win-win situation. But when that actually happens, you want to be able to be there to make the money when it's willing to give it to you, and having long swings and initiating new long swings at any point over this year so far, 2022, or the end of last year also, has been very difficult. So that is all I got. So I hope that helps. And now I am happy to answer any questions that you guys have. So I'll scroll up here a little bit into the VTF. I think the first I'm seeing is from Robert. Maybe I'm a little bit overthinking here, but I was looking at SPY during the open. Okay. I was looking at SPY during the open as we made a pivot point at the ADMAs at 9:55. Yeah, I was communicating this inside 5 and up here. So before I read the rest of your question, just some recap. We had a big gap up this morning. So what I'm always looking for in these big gap ups is, similar to what I discussed with Match. If you can consolidate a gap up, that's really the same thing as a bull flag. So for the SPYs and the Qs, we started by consolidating for the first 20 minutes, but look here, right before the little breakdown at 9:45, market's trading at 424.40, ADMA still down at 422. You really need, basically what happened in Match, you need this ADMA to catch up to get continuation. Almost always. Almost always. And that's why most of the time bull flags will continue just as the ADMA is catching up to price action. That's not a coincidence. The market is no longer extended on that time frame, and you can get continuation. It's like literally what a bull flag is. A bull flag is a price correction of upside extension. So the price correction is over when it's no longer extended. How do I know it's no longer extended? Because the ADMA is catching up. So I'm watching the SPYs, I'm watching the Qs, and I was nervous. And I'm like, all right, common gap to the upside in a bearish market. We're holding up here, but I need this ADMA to catch up. If this ADMA catches up, then maybe we can get some upside continuation. And instead, what eventually happened was the bottom did fall out a little bit because we were still extended. And we just, traded back down into the ADMA. Okay, this candle should have you nervous, by the way, if you're, no, I guess not if you're short, but if you're long or looking for longs, this candle should have you nervous. But you recognize, okay, all right, we just, trade into the ADMA. Let's see how the market handles this, or can we get a pivot off equilibrium or not? And one of the ways that I prefer to see a pivot take place is through an inside and up that negates this candle. So I know Felipe, I think, said that he was buying IWM at that time into this pullback here. And I was like, all right, that's great, but we need this little breakdown candle that just happened at 9:50 a.m., which, doesn't look like a breakdown for the IWM because the IWM was so strong. It's really just a price correction. We need this little breakdown that just happened for the SPYs and the Qs. We need that candle to get negated. And then very quickly it happened for the IWM, and the SPYs did that via an inside 5 and up. Let me read the rest of your question. However, I was still leaning. All right, so you're watching at 9:55. We made a pivot point into the ADMA here. You're still leaning more into the short side due to the opening price action. What I did not like today was gap up. We were forming a time correction in the SPYs, holding 424 level. However, 950 candle breaks the low of the day. If we would only have made a time correction until the moving average is caught up to 424, I would have been more bullish on price action after 10 a.m. Yeah, so I think I basically covered your question kind of in my analysis already. This candle should make you really nervous. But what you hear me talk about all the time is whenever we have like a negative Maribozu or we have a breakdown candle or something like that, the negation of the candle is important. So while this is not good that we're breaking this opening consolidation when we really wanted that time correction in the 80 MA to catch up, while this should make you nervous, while I am certainly not an advocate of buying stock in this candle, even though Felipe did it very successfully, it doesn't mean that we don't, we can't become bullish if it gets negated, right? Because all it did was give a little bit of a price correction down to the 80 MA, followed by an inside 5 and up that negated the candle, and then by the time this candle's getting above here, by the time the 10 a.m. candle is breaking 425, everything is kind of hunky-dory and we're good to go, and let's see if we can get continuation. This is where I actually became disappointed, and I was like, all right, maybe it's a time of day thing. But I wanted, when this new high came in here, I wanted real momentum to come in. And that's what I didn't get. I wanted the real momentum. I wanted us to be at the high of the day at 10:30 this morning. That's what I really wanted to see. I wanted to see that coil that I keep kind of talking about just really open up and cause this big kind of rip higher. And that didn't happen either. It kind of turned it into this grindy price action that had me feeling a little bit nervous. I was a little bit nervous all day today that we could just at any point just have like an afternoon rollover. The shorts that we're kind of buying, like stop buying or whatever, and there's just no buyers out there, and we just, roll all the way back down. I was definitely really nervous of that happening, but it didn't. So, hope that helps, Robert. Next from Sebastian. Today I was paying a lot of attention to the 427 to 428 area in the SPY, which is the daily 80 MA, and its resistance. Okay, I think the resistance is closer to 430 to a little bit above, but it's a range for sure. I guess you're right, because on the downside I kept talking about the space between 430 and 427 as being the support zone. So if you want to describe, 427 to 428 as a resistance area that makes sense, I would expand that resistance area. I would definitely bring that up to 430 because I think 430 is a key spot. And again, we need to negate this negative Maribozu. But anyway, so you're watching the market into that area, and at 12:20, with the shooting star and increase in volume, I tried to short. There were some headlines that were coming out throughout the day as well. I think that we got actually hit with a headline at 12:20. I kind of remember this candle being a little bit volatile because we saw some kind of news hit, and that's kind of what created the little bit of volume here. But it was news that was technically not great sounding, I think, related to the war. I honestly don't remember exactly what it was. I'm sure somebody could look it up here in the VTF. And we didn't break down on it. So I think that's just kind of what happened here. I think you kind of got suckered in on that volatility. I don't hate your trade. I don't like the time of day, though. For sure, I don't like the time of the day. I don't hate your trade. And I think Pat also was looking at a couple of shorts into this area here. And I think he was nimble enough to get his risk covered a couple of times, though obviously he didn't get any follow-through and probably got stopped out. So I don't hate your trade. Your inter-resistance area on the daily chart, it was still a common gap. There was a real chance we could have rolled over this afternoon. Like I just said, I was worried about that all day. I do not like the time of day, so just make sure that you weren't going all in on that one. Also in PM, I don't know if you mean the afternoon or Philip Morris. I noticed how, I guess you mean the afternoon, I noticed how some electric vehicles like NIO and XPEV were setting up nicely intraday and gave a great continuation. I bought NIO at 1881 at the open. Sure, I actually didn't have those names on my radar at all today. I don't even think I typed NIO up a single time. Great looking follow through on this NIO. I do really like this company. I'm really bullish on this company. Great little intraday trend here. So yeah, so good job if you're able to capture that one. Kind of similar situation as a lot of the ones I was looking at, right? that I brought up already in the meeting, where it was 6 days down or whatever, and you just got to snap back to equilibrium. This is where the tough part comes now for Neo, and for a lot of the ones I'm looking at too. We got to snap back to equilibrium. Can I get real follow through or not? We'll see. From Terry Jones, CCJ. Yeah, so CCJ, uranium play. We've been seeing a lot of bullish option flow on it, and then I haven't been involved, which is probably my bad. But a lot of the folks in the team here have been involved in and looking at CCJ and more particularly this URA. URA is the global uranium ETF. This had a great breakout today through $25. Great breakout of a bullish continuation. It looks really good. And CCJ is a more pure play individual company here that's involved in the uranium space. This also had a fantastic breakout through 25.50, and then it got hit with that news in the afternoon here about sanctions against Russian uranium, I think is what it was, that ripped this further also. So yeah, I like it. I think it looks great technically. I like the qualitative fundamental concept behind the trade as well. Good stuff. From Diego on pins. Diego, my brother, on pins. Can you go over the possible setups over the day to get into this name? Your first entry, gap and go over 24, and then a bull flag on the 5-minute. Yeah, so the first thing I would preface this on is that this is not a day trade for me. This was not intended to be a day trade for me. I got in this initially looking for the reward that I already discussed based on the daily picture that I already discussed. That double bottom potential, the 5th day down yesterday, a little bit of the higher volume on the doji, a little bit of relative strength that the stock gave, the fundamentals behind it. There's a lot of things that I like here. So that has me wanting to be involved in this on a big picture. So that's really what I was looking for. My execution on this was a little bit looser than I normally like. Normally, I'm trying to have tight execution on the ideas that I have, right? Especially on kind of the initial entries. I want that breakout. I want that bull flag. I want something. I want the daily level getting cleared, something like that. And normally I don't like buying right into the equilibrium zone on the daily chart for a stock. But again, I have these big picture type of ideas here for this company that makes me like it significantly more. So I was definitely a little looser on the buying. My first buy was a feeler. It was a feeler because I wanted to start watching it, because I wanted to be in it. That was it. It was small. It was small enough where I could give this thing real room and not really care about it too much based on the bigger picture concept. And that was literally pre-market. As soon as I was done with the morning meeting, I put a bid in at 23.51 for a small feeler. It was kind of like the inside bid. Maybe there was not quite the inside bid, but it was pretty close to it. Just to see if I could get filled on that for an initial feeler. And again, what's the purpose of a feeler? It's to make you be able to watch the stock. So then, holy cow, I'm getting filled, and look at the opening drive momentum on this thing. Maybe not massive volume, but trading better than anything else I saw for the most part, pretty much from the second the market opened. And I'm like, okay, I gotta get more. And I was actually upset about even though I was long, I was long a small position, so I'm making some money, but I'm not making real money because the position was so small. It was just a feeler. So I'm actually upset that this thing is running. I wanted to be able to build into it better. I wanted to be able to buy cheaper prices a little bit more. So here I can even kind of show you the entries on my dots here. So I ended up taking an additional ad here that was just purely based on momentum. I was like, okay, this was my feeler. This is given a big move. I can give this to lows. And then I wanted to be able to get in further. I was really hoping that this was going to be like an inside candle and it was going to rest and bull flag a little bit further. And I was kind of getting frustrated that I wasn't able to get more stock. So these entries right here are really not great entries, to be totally honest with you. It's me being a little bit looser on kind of buying than I normally would be because I wanted to get the stock. Look how extended this is when I'm buying it here. Like that's not great entry execution at all. But it's like, oh man, this thing is all the way up here. Like, let me buy a little bit more. I'm watching it closely. Oh my God, it's so much relative strength. Let me buy a little bit more. And then I was like, there was such good early momentum in this, and now it's resting a little bit. I was like, I don't want to be doing more of these buys, but I also don't want to miss it. So here's what I'll do. This was my thought process. I'm gonna put some bids out lower in case this thing price corrects back down into the ADMA. That could give me a better buy. But I'm also gonna put a buy stop at highs, just in case the momentum that came in on this first bar gives immediate continuation. I don't like 2-minute charts, and I wasn't looking at a 2-minute chart. I really don't look at them, but I could imagine in my brain that on a 2-minute chart, equilibrium was catching up, and maybe this thing could go on some sort of, if there's some serious momentum, then 2-minute charts can actually still be important. That's why I have one on here, but I never look at it, and I didn't look at it today. I just kind of intrinsically kind of knew that if this thing just explodes here again, I'm still going to be unhappy by the amount of stock I have, even with these initial buys. So I put a buy stop here. It triggered. Then the stock pulled back. I still had, and that's when the market pulled back too, I still had the bids out. Remember when I said to you I didn't want to buy here? I really even though I did a little bit, this is really bad execution. I either want to be buying a pullback closer to equilibrium, or I want to be buying kind of momentum continuation. Because then it's just going fine, fine. If it's just going fine, like I'll buy the momentum. So I put the buy stop out there and I put some bids. So then the price correction actually came in. Oh, and then when I got filled here, I was annoyed. So I actually raised one bid to those original prices. That got filled, and then the lower bids that I actually had started to get filled into this pullback. I had a bid at 06 and 01. The low here is 06. I got filled that. I did not get filled my 01 bid. And because I didn't get filled my 01 bid, then I said to myself, all right, this thing again is so strong, and now what the market just did, because I'm always watching the market at the same time, this market's breaking up now as well. And like I just said, I think in answer to Robert's question, my disappointment here was I didn't get momentum in the market. And I'm starting to think, oh my God, inside 5 and up, off equilibrium, we're breaking this low, market momentum could actually come in, and I still want more of this pins. So I'll put a buy stop at the high of this red candle. If they negate the red candle, I'll buy more. And it's the same thought process that I had on the importance of, even though I didn't actually buy it, the importance of the negation of this candle. Exactly what I was talking about. So now if the market here, we're getting inside 5 and down, market fills its gap or whatever, same thing. I'm not getting this buy. And that's going to be fine. I don't want to buy if the stock is going down. But if the market is able to negate this candle and is now looking really strong, like it could give momentum, I want more of this thing still. So I'm still working on building in the position. So that's when I took my last buy here. So I think that my average price, all said and done, ended up being like 24 quarter or so, which is right about where I was doing more of these buys in here. And then the thing broke highs and it just looked absolutely fantastic. And I did not do the 1-to-1 kick on 50% of my position in this, which I do a lot, because I want to be buying this thing and manage my risk, of course. But I'm looking. I want to get a move to $35 on my stock. I'm trying to get paid on this one. So I hope that helps, Diego. From Robert G. You answered my question. I was going to ask about common gap ups in a bear market. Price action gets 51% of the vote, right? Okay, I don't understand the last part of the statement. Price action gets 51% of the vote. Yeah, I don't understand that part of the statement. But price action is king. But we want to understand, like I was saying before, we don't want to just memorize what things look like. We need to also understand the supply and demand kind of behind it. From Kosh, SPY level 2. SPY level 2 has 416.62 as the low of the day. So the level 2 doesn't show the low of the day. The level this information up here is level 1 information. This information down here is level 2 information. So the level 1 for me shows that the low of the day is 422.82. Let's see if that's right. Yeah, that is right. But the level 1 information is wrong a lot. I've noticed it's not unusual at all to have a day where the level 1 information is wrong. And sometimes you'll also get like a false tick in a chart too, which will mess up the level 1 information, and it'll mess up the... Oh, did I miss this Amazon news? Chatting with you guys, doing an afternoon meeting when I should be looking at Amazon? $10 billion buyback and a 20-to-1 split. They're just announcing this out of nowhere in between earnings reports. Well, that's going to be bullish for the Qs. Oh, man. Why are they doing it in between earnings reports? Maybe they're just like, our stock hasn't been trading well. Google is pretty cool. They did one, so we can do one too. Such bizarre timing on that. I'm really curious to know more information about the timing of this announcement. Well, that's certainly going to help our NASDAQ. Qs here are up, well, they're only up another 90 cents. But I wonder if this could really help us recapture some of those key levels. Interesting. From Robert G. What criteria do you apply to take profits once risk is covered and assuming you have more than one lot to trail after risk is covered? So it very much depends on the trade. I think that the biggest thing though is to make a game plan for that specific trade and then follow the game plan and not kind of just be making willy-nilly type decisions. Create a game plan for your trade, follow your game plan for the trade. And that game plan should include aspects of trailing on multiple time frames and or possibly booking profit at certain increments just on the way up or at certain levels. Or possibly leaving some for selling into large extension. So I don't have a specific criteria that's going to apply to every trade there. A lot of what I'm doing is I'm looking at daily charts and I'm assessing the probability of those bigger moves on the daily charts and assessing, there are some subjective things which probably isn't perfect, but like I will assess, how my portfolio is as well. How badly do I need the stock? Am I already, uncomfortable with the amount of longs I have, in which case I don't care if I get stopped out, so I'll trail it much tighter. Or maybe it's the opposite. Maybe I feel like I'm underinvested and I want more on my long swings, so I'm willing to be a lot more loose with it. And then again, it's going to be daily chart considerations. What do I think this daily chart can give me if this trade really works out? So then, again, if you trail stock on a 5-minute chart, you're almost going to be guaranteed to get stopped out at some point during the day. If you trail on a 15-minute chart, you're going to be willing to give back more risk to potentially make more reward, but you got a higher probability of still having that stock on the end of the day. So, I can trail some on a 5 that you're no problem getting stopped out of. I want to put the money in my pocket. Trail some on a 15-minute, where you can still be locking in some profit for yourself, but you're really giving it the opportunity to work for you during the day. You could trail someone an hourly potentially. I don't do that as much. 15-minute trails on things that I want to swing are going to be more commonplace. But hourly is just going to be willing to give back even more to make even more. Sometimes, and I do this a lot though, so I'll trail on a 5 a lot, I'll trail on a 15 a lot, I'll trail on an hourly once in a while, but it's not unusual at all if I really like the daily chart on something like this pins to be saying, I'm willing to give all of this all the way back or a good percentage of it all the way back because I want to see how this thing closes because I really want to swing it. And then also, if I've got, just use simple numbers, if I've got 1,000 shares of a position and I'm trailing it now, sorry, I'm getting all over the place. If I do keep, whatever I keep overnight, I generally commit to trailing on a daily chart. Otherwise, if you're gonna continue to trail on a 15-minute chart the next day, let alone, or definitely a 5-minute chart, it's not worth the risk of keeping it overnight. my opinion. If you're keeping it overnight, if you're taking the overnight risk, you're really looking for daily chart reward. So you got to be willing to kind of give it back to your original stop loss at that point or to a new daily chart trailing stop. And then, if you have that 1,000 shares and it gets really extended and you want to take a couple hundred shares off just because of the degree of extension, try to buy it back, whatever, that's some cash flow trading around a core position. I love doing stuff like that. So I hope that helps. Robert, I have a meeting in 5 minutes. I was just saying that if 90% of the time a common gap in a bear market gets filled, doesn't that mean gets filled doesn't mean anything if the price action doesn't support? Yeah. Right. Cool. Yeah, no problem. Guys, I've been meaning to mention this. Next week, maybe you guys have seen the spam emails that come from T3 Live. Next week, I'm doing one of those open house things. And this goes for the people who are listening on YouTube also. You guys can sign up for it. Next week, I'm doing one of those open house things. They're a huge pain in the butt. Last for the whole week. This is going to be like the 4th time that we've done it. The first few times were pretty successful. So I'm willing to do it again. So basically what the open house is we open up the virtual trading floor for basically anybody to come in for the week. It always makes me a little nervous because I really like the community that we have in here, and I like the way it's been built because, in my humble opinion, we have the most professional virtual trading floor that T3 has, and part of the reason of that is because the majority of you are professional traders, and the majority of you have a direct relationship with me or with Josh or with Pat or with Colin. So it really kind of turns our VTF into a no bullshit type of room. And the problem when you just let anybody in is you don't know who these people are. You don't know if they're on a real account, a demo account, $1 million account, if they're just talking their book, if they're actually contributing or not. So it always makes me a little bit nervous to do anything that could negatively impact the professionalism of what we have. So I'm going to make sure to read people the riot act on Monday morning when the open house begins. But you guys who have been in the past, you know what it's like, and it just it makes for a lot of work for me and Pat. These afternoon meetings tend to go a lot longer because there's a lot of questions, which will be a good review of things. But at 8:45 a.m. on Monday, so the normal morning meeting starts at 9. At 8:45 a.m. on Monday, I'm going to do like a little introduction to our guests so that they know what they can expect. And again, I'm going to read them the riot act a little bit about what I'm looking for as far as professionalism in the VTF here at that time. The T3 team, and I kind of am doing this begrudgingly, but I'm a team player, has asked me to do a couple classes during the week also. So I'm going to be doing a class on Tuesday and Thursday next week through the virtual trading floor, I think at noon Eastern time. I think I'm going to be doing my an aspect of my game planning class on one day and an aspect of my probability class on another day. So, most of you guys have access to my training program. You have that information already. It's a repeat. You're welcome to just mute me and ignore it because you already know it, or you're welcome to listen in if you want a review on it when I'm doing it. I'm trying to not give away everything I do just for free to just random people, to be totally honest. So I'm going to try to do a more shorter, condensed version of it to still, give people a reason to actually be part of our team. But I just want everybody to be prepared for that because it's going to be next week. It does mean that Pat and I are going to be on the radio even more. I try to leave my calendar pretty open as far as my midday meetings and stuff when I do that week. But yeah, things will be a little bit hectic in here, but I really appreciate everybody's help in the team, just keeping an eye on things and helping with the people who are coming in. I got to jump into a meeting. Larry's asking about UpWK. Let's take a quick look at it. I actually haven't looked at Upwork in a long while. This looks just like a lot of these other growth stocks. This would have been a good buy today too. 6 days down in a row. Doji yesterday, not on too much of an increase in volume. good follow through, but it looks a lot like your Robloxes and your pin and things like that. So we'll see if this is just the next lower high, you know, oversold bounce into equilibrium, lower high downtrend continuation, or if maybe, just maybe this time is different. I gotta jump into a meeting. Bring back Sebastian. Sebastian, if you're listening, people want you back for the open house next week. I gotta jump into a meeting. Have a great night, everybody. See you tomorrow morning. I got a feeling this Amazon might cause this whole market to gap up. Heck of news there, and I'm pumped. What is it? Where's the stock gonna be trading? I gotta go into this meeting. 20-to-1 split. Okay, I'll take it. I've been wanting these things to be cheaper for so long. Have a great night, everybody.